Hey, this is Matt from InvestiQuant. Today is Wednesday, August 18, 2021. Yesterday, we saw some selling pressure come into the markets for the first time in a while. We ended up with about 42 points of range in the S&P. We had great volume for the first time in a few weeks, and we made some new lows, but then bounced into the close. So we're going to test that type of pattern where you sell off, but then you get a decent bounce into the close where you finish in the top half of the range after making a 5-day low. So let me go ahead and set that up here in Discover. We're going to grab all four instruments here. The setup's based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading within the prior session range. We're not far off of yesterday's closing price as I record this. So for the opening location, I'm just going to put open within the prior day range. There's a chance it could go up. It's currently down right now, but we're close enough that who knows what's going to happen here ahead of the open. So I'm going with open within the prior day range. I've hit equals there next to it to add it to the test. Next, I'm going to go into the price patterns library. In the price patterns library, I'm going to say that yesterday made a 5-day low, the lowest low of the past 5 sessions. And I'm going to grab that from over in the active today section, which is telling you all the things that are true for today. Down at the new lows section, there's a 5-day low close, but what I'm going to go with is actually the lowest low of the past 5 days. So that's referencing the actual low of the day. Where was it relative to the other lows that have taken place here recently? But then I'm also going to add to it that it closed in the top half of the intraday range. I'm going to grab that right up here under the location of the last close. So the location of the last close was in the top half of the daily range. So that comes from this category right here. And the new lows has that 5-day low. If I was to scroll down, you would see it in this long list that we have. So I've added both of those to the test. Next, I'm going to go into the indicators and say that that 5-day low was taking place in a bull market environment. So above a 10, above a 200, that does matter. And now I can hit view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time when you open within the prior day range, and the prior day made the lowest low of the past 5 sessions, but closed in the top half of its intraday range. This is taking place in a bull market environment, which I've defined as above a 10 and 200-day simple moving average. Historically, there's 67 samples in the S&P to look at dating back to 2003. We've got 60 in the NASDAQ, 62 in the Dow, and 62 in the Russell. So pretty similar sample sizes across the board. And win rates on them are either neutral or mildly favored. So the S&P is the strongest of the group at 60% of these have closed higher on the session. For the NASDAQ, dead even there, 50-50. The Dow, 48%, the Russell 53%. So not great win rates. The S&P is the strongest of the group. You do look at that equity curve for all of those and see that it is all kind of working its way lower, and that's due to these average losses being larger than the average wins. So if you look at the S&P there, the average loss quite a bit larger than the average win, and that is also true for all 4 instruments. So all 4 of these have larger average losses compared to their average win size. So historically, this day has not shown a strong bias when you look at the win rates for closing above the open or not. The S&P is the only one that is really leaning towards that direction, the upside direction, with a win rate that's close to 60%. But they have all had larger moves to the downside. So hopefully you found that helpful. Good luck today, and we will see you next time.